coming into the today's segment, I was planning on mostly talking about Wednesday. I mean, Wednesday was the day. Well, I should say two things. Okay, to start the week, we had the Moody's downgraded debt, right? But that got bought up really quick. I mean, what did you think about that, first of all? I mean, were you worried about hearing it came out on Friday? You know, we had the weekend to stew on it. We start the Sunday off down 60 handles.
I mean, in hindsight, it looks like it was obviously bid too quickly, right? I mean, I was actually pretty encouraged with the way the market behaved prior to this tweet. Now, by the president, I look at it as, okay, so without getting too close to the flame, does this tweet change everything that's happened this week prior to that, the downgrade of our U.S. debt and everything else like that, and how the market behaves? So I'm kind of discounting it a little bit, like it's kind of like an artificial thing, but I'm keeping an eye on volatility.
The tweet or the Moody's thing?
The Moody's thing, I thought would have been we would have had a bigger move in the market lower.
No.
Nobody
cares about that.
See, this is just really interesting because we got three, right? Like we got the Moody's downgrade. Then on Wednesday, obviously the 20-year auction didn't go well. Market falls. Then today, Tariff Man comes back. So makes sense to all three of those for me.
I think the bond move and the Tariff Man are scarier than Moody's. Moody's doesn't scare me. Moody's, who cares what they think? You know,
I agree with you there. I think it's all subjective and kind of perceived. You know, like what the public, what the media perceives it to be, to show to the public. I agree with you there. I do. Yeah. But I just thought we would have a little bit more volatility. I thought we'd have a little bit more of a washout just because of the news. Almost like the move that we're having here today. Like I think it's. I don't want to say it's overdone. I think it's almost like it's overdone. So I'm keeping my eye on volatility. 2240. It's got to be 2220 or below to say we've got something going on here. Anyway.
So yeah, we got VIX in the 20s once again in the near front month. They're almost flat in the front month actually. And you kind of figured if we got another move like this, we could possibly see a little flat, maybe even a little backwardation. So I mean, I gotta say, I'm a tad bit surprised at the move this morning. I mean, you know, I thought the sort of prevailing feeling now is when we have news of a tariff, that is a situation to create a negotiation for which will eventually happen. But he said negotiations are going nowhere. And so maybe that's where the fear is coming from. And it's a long weekend. We know how a lot of times people feel about a long weekend. They sell off a little bit ahead of it. Nobody wants to hold certain things over the weekend. So, you know, like you said, I still think this creates a good opportunity for some volatility. Some of the names, you know, I think we're going to see a situation now where we get spies in the queues above 25 to 28 IVR. I mean, they were like 21 yesterday. So I think that's when a market gets really interesting, when we get spies in queues, high 20s, almost 30 IVR. Create some opportunities, I guess.
Well, I mean, this is where we were back in May, right? I mean, well, back in May. I'm talking about May 12th or so, right? We're back down to where we were before we had that moonshot to 6,000. Yep. We've sold off 150 handles on the E-mini S&Ps. We've sold off more. Almost more in the Nasdaq, even though the Nasdaq is a bigger product. Obviously, I mean, I don't know what. So somebody asked me on Twitter when we were 5,900, do we see 6,000 before we see 5,800? And I said, you're going to see 5,800. I thought you'd see a chance to see 5,800 first, which we're now 57.60. We got down to 57.56 before you see 6,000, but I think you're going to see 6,000 before you see 5,700. You know what I mean? So I thought we'd have a little bit of a sell-off here. Now here we are. So now that was only 48 hours ago or so. Does your opinion change on a tweet? And I don't think it does. But volatility is telling you we got more downside to go because it hasn't really had a downtick. It's 2260 and change.
Well, the weird thing I was going to ask Jamal too, if you look at the vol curve, because you mentioned the vol curve being flat, it's been flat for the better part of like the last couple weeks. I mean, there's slight backwardation, slight contango, but it's been kind of moving in lockstep. It's not moving like it's almost pricing that volatility that this is going to be like this for a period of time. Typically you see where you talk about a spike in volatility and you get into a backwardation, and that's kind of like, the sort of bottoming process, right? You get this blow off in volatility, it spikes real high, back month volatility is relatively low, and then you get kind of the flattening of the curve, and then you ultimately get into some sort of contango. But volatility has been just kind of flat across the curve. It's moving, the whole curve. Is that something that you're looking at, or that speaks to you in any way?
I agree, actually. I completely agree. It jives with what we've seen. Volatility's mostly been kind of flat across the VIX curve, save for maybe like a 3-day period around when May VIX was expiring earlier, like late last week and earlier this week.
Yeah.
It almost seemed like everything was over, and there was like $1 and change difference between May and June VIX. And then Wednesday just so happened to coincide. You could argue either one with VIX expiration, or obviously the 20-year bond auction. Obviously, is what really caused the market to move. Just so happened to be on a day where VIX had already expired too, so it was a quick sort of move with VIX, and basically right back to flat. 2 days later, we're here where we are right now. So yeah, I agree with you. It's really been mostly flat to a little backwardated over the last 6 weeks or so. So yeah, you're right. I think it's kind of pricing that we're going to be seeing this for a while. But what's really interesting to me? Prior to today's move in Bitcoin has probably been a little bit less volatile than equities and bonds, which is really kind of wild. But it has been. I mean, it's
been one of the most stable
really
currencies
matured.
you can find. I totally agree with you. I mean, you look at the euro, which you can extrapolate out and look at our dollar. I mean, it's had two-sided action. For sure, the Bitcoin itself, with a much higher implied volatility, has been doing nothing but going straight up. It's
wild. Yeah.
It is.
So yeah.
Today you got a decent sized move to the downside. I mean, but still 109.5 after trading 112, almost 113 on the futures.
Yeah. So, yeah, I mean, the moral of the story, I think Nick hit the nail on the head. The moral of the story is it seems like it's going to be around for a while. I think you got to pick and choose your spots. I think if you get an opportunity to clean up some things when things calm down, you do it and you reload for more. I mean, basically, it's going to be that kind of year or a couple of years.
Love it.
I do. I think volatility. I think Nick pointed to volatility here a moment ago. I know you just talked about Bitcoin volatility not really being that much. You just talked about volatility being kind of flat on the curve. I think Nick hit the nail on the head, and it's kind of, I wish we would have said it yesterday as opposed to today with volatility expanding the way it is. But I think the new norm, you're not going to, like Tom and I talked about, 18, 17, 16 vol. I don't think
12, 13, 14.
Yeah,
no way.
Yeah, I don't think you.
Markets.
None of us want that anyway.
No, nobody does. No.
But I mean, the way you've got bonds moving, which was never a thing before. You have, gold is kind of in play now. You have Bitcoin, a brand new asset. By brand new, I mean like really mainstream asset over the last 4, 5, 6 years, 10 years, whatever. Yep. It's a lot different market than we had in 2015, 16, 17, when it was just a 5-point range, 10-point range day to day, because there's nothing to do. There's no volatility, nothing to trade, nothing happening, no news, no tweets, no nothing.
Markets seem to be ever evolving. Yes, they certainly do.
Settle in.